Welcome, everyone. My name is Kelly Richardson. I am the designated broker with Rowley Properties in Issaquah, and I'm the CCIM president-elect for the Washington State chapter. We are really happy to have you with us today. While King County is in phase 2 of the pandemic, it can be easy to feel disconnected. We at CCIM Washington State have online courses at our website, which is CCIM-WA.com, and these include condensed virtual courses to give you guidance and practical tools to help commercial real estate professionals weather this storm. Knowledge is power. You are also welcome to join our committees and connect with us virtually. Information on this can be found on our website at CCIM.com. I want to thank our annual sponsors, William Kastner, Rob Sargent. He's a senior attorney and can help you with all things real estate. The Benaroya Company, Lisa Goodman, Larry Benaroya. They specialize in acquisitions, development, and leasing. IBA, Curt Maier. He's business brokerage, deals in mergers and acquisitions for a variety of businesses. Ameriprise, Kevin O'Keefe. He's a private wealth advisor to help with market insights and financial advice. Our power partner sponsors are McConkey Development, Fred McConkey, and Rowley Properties, myself, Kelly Richardson. Our media partner sponsors are the Registry and the Daily Journal of Commerce. Our in-kind sponsor is BDP Design, Kelly Beckley, for all things marketing. Please check out our website. We've got CI 101 through 104 classes, which are on an online condensed format. Visit our website for more information, which is CCIM-WA.com. Also, check out our website event calendar for updates on future events. Now, I would like to go over some housekeeping for today's webinar. And the housekeeping: to minimize external noise, all attendees are muted. However, we highly encourage questions and comments. If you have questions, please submit them in the Q&A forum and not the chat window. In the Q&A forum, you'll be able to upvote questions. Upvoting will help us prioritize your questions. If you're having technical difficulties during the webinar, please call 1-888-799-9666 extension 2 for Zoom tech support. You may also try logging out of the webinar and logging back in. We are recording this webinar and it's going to be available on demand on the CCIM on our website, CCIM-WA.com. Now, I'd like to talk a little bit about our webinar today. We are going to be having an economic update from experts in the stock market and with mergers and acquisitions. And I'd like to tell you about our guests. Our first panelist is Kevin O'Keefe. He was born and raised in the Seattle area. Kevin attended Seattle Pacific University, where he achieved athletic success in his 3 years at SPU. Before graduating in 1987, Kevin played midfielder on the famed SPU nationally competitive soccer teams, winning 2 national championships. He was a captain and received the Coaches Award for the most impactful player. Kevin then played professionally for FC Seattle Storm for 2 years. Following his soccer career, Kevin began work for Drexel Burnham Lambert Company. Starting in the mailroom while attending SPU, he worked his way up to the ranks of financial advisor in 1989. Prior to joining Ameriprise, Kevin advised clients at Morgan Stanley. While there, Kevin focused on managing accounts, financial planning, asset allocation, and estate planning. Recruited to Ameriprise because of his experience and success, Kevin is now a managing director and private wealth advisor at Ameriprise. With 29 years of experience, His focus at Ameriprise centers around comprehensive financial planning and professional money management. He prides himself on placing the client's needs first and offering exceptional customer service. Our next panelist is Curt Maier. After graduation from the University of Notre Dame, he served in the United States Navy as a nuclear submarine officer. After 5 years of active duty, Curt joined a Fortune 300 company, Air Products and Chemicals. He advanced rapidly from sales engineer to general manager. Along the way, he earned his MBA and grew the North American business through several mergers and acquisitions. After 20 years with the company, Curt took early retirement and became an entrepreneur. He joined Clinical Services, a provider of hyperbaric oxygen therapy services, as a principal. After growing and then selling this business, Curt became a franchisee in the senior healthcare market and established a senior adult day services company. He grew this business over the next 6 years and then sold that. He realized that there was a need for both seller and buyer representation for small businesses. Therefore, he became a business broker. He was with Murphy Business Sales covering the greater Seattle area. He built this business over 5 years and then sold it at the end of 2016. He joined IBA, the oldest mergers and acquisition business brokerage in the Pacific Northwest. As the Vice President of Business Development, Curt spent most of his time developing professional relationships, which provide referrals for sellers seeking representation in the sales of their business. He also remains a licensed franchise broker, providing an option for buyers who cannot find existing business to meet their criteria. In 2019, Curt was named IBA's Broker of the Year. Welcome, Kevin and Curt. Thank you so much for being with us today. Kevin, I'd like to direct my first questions to you with regards to the stock market. Why is the stock market going up so much when we're in a pandemic?
Well, Kelly, thank you so much for having me today. It's such a pleasure to be part of your panel and so happy to be a part of CCIM from the sponsorship standpoint. Well, we're in unprecedented times right now. This is the first time in the history of the markets where we actually stopped the economy intentionally. So it's created that big downturn in March, and now we've had this huge rally back. And the reason that happens is because the market is looking through all of this out 6 to 12 months, anticipating a very rapid recovery that's being referred to as a V-shaped recovery, where it goes way down and then all of a sudden it shoots straight back up. So the market's looking forward to getting through this and then having a huge pent-up demand by the consumer, because as we all know, being cooped up sometimes is not fun and we just want to get out. So we've seen areas such as camping gear, RVs, those sales are going through the roof because people just want to get out. So the stock market's anticipating that as well, and it's moving in advance and ignoring the fact that earnings are not going to be good this quarter or next quarter, but hoping they reaccelerate in the third and fourth quarter and go into 2021.
Now, Kevin, do you think this is the start of a new bull market?
Well, it very well could be, because that was one of the shortest bear markets we've ever had, because it went straight down and then all of a sudden it went straight back up. But it very well could be. And also things are getting better fundamentally, because when you go down and stop everything, it's not hard to get better from that point. So, things are getting better fundamentally, and a lot of the money managers that I follow were actually bearish going into January because things weren't looking good, and now they've been getting more constructive based on the fundamentals. So it very well could be the start of a new bull market.
Well, now question. So we hear a lot of noise in the media. And so as far as the outlook looking forward for the economy and the stock market, is it normally, is the stock market normally 12 months in advance, or is this something in particular? And anything else you can tell us as we move forward in the economy and the stock market?
Well, yes, it is normally a forward-looking indicator, 6 to 12 months. Things move quicker now based on information and how quickly information is processed. But there's a couple things that are helping this market go up. One is that we have a Federal Reserve with a bazooka with unlimited ammunition. So they came in extremely fast with an extremely aggressive move by injecting all that liquidity into this market. It was actually a faster response than even in 08, 09. So that is really helping prop up these prices, and also zero interest rates. And again, the fact that the economy is anticipating a recovery quickly. And one thing that people aren't looking at either is that one of the managers I follow says we're in the beginning of a new industrial technological revolution. And so as we've seen during this shutting down of the economy, we've seen this Zoom technology, we've seen all of these technologies that allow us to work from home. There's also, self-driving cars coming, artificial intelligence, AI, 5G, there's going to be smart buildings, and this is happening right now, and that's going to create a lot of growth and a lot of opportunity going forward. So I'm very bullish long-term for innovation and the economy on that front. But things could change. COVID could resurge. We could have to close down the economy again, and that would derail this rally temporarily. So there's a lot still up in the air, but I'm always long-term bullish on stocks. And again, as long as you have the correct asset allocation to be a long-term investor, you should be okay. But from the short term, it's extremely unpredictable at this point.
Well, it's definitely going to be interesting to see what happens as we move forward.
Mm-hmm.
Now, Curt, I have some questions for you. IBA is a regional company. Where do you operate, and where are most of your transactions?
Well, Kelly, thanks for inviting me to participate on the panel. Look forward to sharing a bit about IBA here. IBA has been around since '75. We were founded in Portland and developed the Seattle market in the early '90s. So we have operations in Oregon, Washington, Alaska, and Idaho. Actually have offices in Portland and Anchorage, and our headquarters is in Bellevue. Our scope extends from up north in Bellingham down to Portland, from Port Townsend to Coeur d'Alene. So we cover the entire turf here in the Pacific Northwest, but probably 80% of our business is done here in the Puget Sound region.
Very good. Well, how many deals do you typically do in a month, and how has the pandemic affected your business?
Well, over time, we typically do between 3 and 7 deals a month. We have a dozen brokers spanning a number of industries, both in manufacturing and services. The pandemic, interestingly enough, has resulted in a great deal of activity for us. Not so much in terms of closings, although last month we did have 4 closings and we have 5 deals in escrow, so we're pretty consistent with our performance in the past. But it's been interesting to see the activity both from potential buyers who have a lot more time on their hands now to evaluate opportunities. And interestingly, we're getting a lot of inquiries from owners who I think have realized that maybe they should have taken some action previously. And so they're requesting us to do a lot of evaluation work in anticipation of potentially selling.
Well, very good. Can you give us the idea of the types of businesses that are sold by IBA and what niches that you serve?
Yeah, well, we serve businesses in over 20 different industries. So again, in all kinds of manufacturing and services, franchise resales and such. And Our brokers have expertise because they have been owners of businesses or they have been franchisees and such. And so, bringing that industry knowledge to bear really, assists in a successful sale for the owners.
Very good. So what kind of mergers do you see going on nationally or in Washington State now and in the future? Do you see businesses looking to merge so that they can get relief, or are there other reasons?
Well, first of all, businesses can be sold to a variety of buyers. They range from individual buyers to private companies, to public companies, to nonprofits even, private equity funds, search funds, and the like. And, when you think about mergers during the pandemic, it's going to be for the same reasons that we see mergers during regular times. You have the need for vertical integration where you want to bring more products, newer products. You want to leverage supply chains, distribution, customer engagement. And then you have the horizontal integration where you want to grow via expanding your geography and expanding your market share. So what we see now is that those successful companies that have the financial resources will view this as quite the buying opportunity. When we look at particular industries to focus on here in the next couple of quarters or whatever, we look at hospitality, retail, and manufacturing. Interestingly enough, the hospitality is the trickiest of them all because it's still unknown where valuations are going to end up on restaurants in particular going forward. I was scratching my head last night when I picked up dinner at Maggiano's, and I realized that, it can't go on that much longer with the reduction in capacity and such in hospitality. In retail, certainly retailers have been embracing or should be embracing the online platform. And so we see retail continuing to evolve and using storefronts in a way to bring specialized customer service, specialized goods and such. What comes to mind to me is the Tesla model. I think they really have stepped out of the paradigm by, having the showplace there where you've got that intimate customer service. You're doing away with the need to have inventory, on lots and such. And so we see the smart retailers embracing the online platform and using the storefronts in that particular way. I would also say in manufacturing, the reason we're looking at manufacturing is that certainly there'll be a lot more manufacturing done here in the United States. I think with everything that we see going on with China between the trade deals, the concerns about coronavirus and everything else, we certainly see more investment in manufacturing in the United States and here in the Puget Sound region in particular. So, that's a bright spot in the near future.
I think this area has quite a bit of bright spots. So I think we're fortunate, but I would echo your synopsis of having to be innovative as a retailer in hospitality. That's critical. Curt, can you tell us how you mentioned this a little bit. Can you tell us how the pandemic is affecting business valuation? And are there any names of businesses to watch for what happens to them in the future?
Yes, well, that business evaluations, as much as I wish, being an engineer, it was a science, it's more of an art than a science. And there really isn't any set multiple for a particular business or industry. There are ranges for companies that are at the micro level and at the small market level, mid-market level, and such. But the real drivers for valuation are going to be some of the non-financial things. Things such as, how much is the owner involved? What is the customer concentration? What are the growth characteristics of the business? So, during the pandemic, I think that there are some new factors that we have to consider, and that would be government intervention, is front and center. I mean, certainly there's real benefit in being labeled as an essential business. I know, speaking for IBA, we sent a letter in very early on to Olympia just to make sure that we would be considered an essential business and could continue our work and such. So, there's the essential versus non-essential. There's the safety aspects and costs of employees that has to be figured in as well. And then the short, medium, and long-term effects of COVID-19. So, again, it just makes business evaluation right now even more challenging than it normally is. I will say this, though, specifically on whether we see valuations cratering. I think everybody assumes that, your business isn't worth anything. Well, in our business evaluation process right now, we really focus on what the last 3 years' performance has been. And we suspect that as long as this can wrap up in the next quarter or so, when we look back, we'll hopefully be able to give businesses a pass during this period. We really will. And I think that's the consensus among the lenders as well. They realize that this is a one-off. This isn't comparable to what we saw in 2009 and such. And so we have not seen valuations decrease in any significant manner. If you have a good, profitable business, there isn't any reason for you to discount it significantly.
Very good. Thank you, Curt. Kevin, I'd like to turn some questions over to you. Our audience, I think, would like to know your thoughts on stocks that affect our local businesses and commercial real estate. We've watched Boeing, the stock go down, the stock went up. Can you tell us what's going on with Boeing and what can we expect in the future?
Well, Boeing had a couple missteps with the 737 MAX. Now, I'm not a stock analyst and I do more asset allocating, so I'm not an expert per se on Boeing as the company or the real estate market. I'll leave that up to you. But Boeing, made some missteps in their communication of what went wrong. And then all of a sudden, COVID came, and now that was another thing that hit them. They did raise their own funds as opposed to taking money from the government. They did a bond offering, were able to raise several $1 billion to keep them going. But, Boeing's going to survive. There's only 2 plane makers, and Boeing should do well in the long run. And now, you mentioned some of these companies have a big impact on this area, such as Amazon and Microsoft. And, the fact that those stocks have done so well, in fact, even excelled during this pandemic, has really helped this area because a lot of people are compensated with stock. And with those stocks at all-time highs, I mean, Microsoft's at an all-time high, Amazon, Google, all these things have been doing so well. So that's really buoyed the wealth effect in this area. And I'm sure that they've also had a great effect on the commercial real estate. You would know better than me. I think Amazon took a lot of space in Bellevue, and Microsoft's always been big here. So the fact that they're doing so well, they have such big cash positions and such cash generators, that those companies I expect to continue to be leaders and have a positive effect on our local economy.
Well, that's good news for us.
Right.
I know Amazon has been looking for about 1.8 million square feet for more distribution to keep up with everything. Now, Kevin, how does the higher, is there any other thing that you might think that the higher price for their stocks affect their team in general, maybe their business, and then any ones to watch that have headquarters here that where their prices may be going up?
You know, as far as the stock prices going up, that just, that just helps the people that are shareholders and all the people that, get compensated in stock. I don't know of any things, there's a lot of companies around here, and there's also, this area has become a hotbed for startups too. You look at some of these private equity firms like Madrona and all these. So there's a lot of innovative things going on in Seattle, not just with these publicly traded companies, but also with these privately traded companies, privately owned companies, and startups. And let's not forget the biotech industry. Seattle Genetics has these great cancer drugs that have been getting approved, and they're out here in Bothell. So we've just got a great list of companies that continually are going to help buoy this economy, from innovation in the startups and also the publicly traded companies. So it definitely creates more spending power when people, get that kind of wealth effect in their stock prices. So it's really beneficial for this area. Very
good. And any thoughts on companies out there creating vaccines and what that might look like for their stocks? Or?
Well, there's a handful of companies doing that. Moderna's one, Johnson & Johnson. There's a bunch of these companies that are developing this, and some are in phase 3 trials right now and have been producing vaccines in case it works. So, and not to mention, we've dumped billions of dollars to help accelerate that into there. So, the experts say we're hoping to have a vaccine by 2021. But, if that were to be announced that they have a vaccine that works, that would also make the market go up even more probably.
Wow. Lots of interesting things happening.
Right.
Curt, I'd like to go back to you. Can you give us an overview of your sales process for business brokerage, and tell us a bit about how you're compensated and how you differentiate yourself from other firms?
Sure, be glad to. Let's talk about compensation first, because that's typically a question that we get up front, and it's one that we're proud of because we do differentiate ourselves from others in that respect. We are 100% performance compensated, which I'm sure resonates with all the CCIMs out there who operate in a similar manner. I mean, we're only paid upon closing. So when we do our business evaluation work, there is no fee associated with that. That's our cost of sales. That's really an exercise where we want to make sure it's the right fit. So we don't charge for that. We don't charge for any of the marketing associated with the business, et cetera. And we take absolutely no retainer, which is not common in the merger and the M&A world. So again, 100% performance compensated, only get paid at closing. Now, talking about the process, most of our business comes from referrals, comes from referral partners such as wealth advisors, attorneys, CPA firms, and now we have personal introduction from one professional to us. We will then have an introductory meeting with the owner. That's typically done, it needs to be in a confidential manner, so it's typically done on their premises after hours. And during that time, we'll explain how we're going to value the business, how we're going to market it, how we're going to sell it. We try to earn their trust in that meeting so that they will provide us the financials that we need to do our business evaluation work. And typically we'll need 3 years worth of tax returns, 3 years worth of financials, the lease, all the typical financial information. We will then take about a week to 10 days to turn that evaluation around, get back together with the owner and review it. And at that point, it's an interesting meeting because, we present a number and It may coincide with what the owner thinks the business is worth, and many times it does not. So at that point, let's assume that we value a business for $3 million and the owner thinks it's worth $4 million. At that stage, we would recommend to that owner that if he really wants to get $4 million, then he needs to improve it. He needs to improve the profitability a number of different ways. And since we did that evaluation work, we can give him some hints as to whether it's a cost issue, revenue generation issue, et cetera. If the owner understands that and is really willing to sell, then he'll engage us. If not, then what we'll do is we'll introduce him to consultants that can help and improve the performance of the company in those areas. But let's assume that we come upon agreement on a selling price. At that stage, he will execute a listing agreement with us. That agreement will be for a term of 6 months, which again differentiates ourselves because most agreements in our industry are for 12 months. But we're telling the owner that we have confidence that we're going to sell within 3 to 9 months, so we're comfortable with that 6-month term. Once he executes that, we put together our marketing package, and then we begin work on identifying the right buyer. Now, IBA has a proprietary buyer database of some 300 plus high worth net individuals, private equity firms, search funds, and the like. So we like to go to that database of buyers that have been qualified and vetted by us. That's our first step. But we'll also use some of the different, websites out there like BizBuySell, BizMart, et cetera. We certainly put our businesses out on the CBA website and such. So we'll commence looking for a buyer. Once we find that buyer, we'll do the vetting of the buyer. We'll have them sign confidentiality agreements. We'll share the financial information, and that hopefully will lead to a face-to-face meeting with the owner. After which time we will stay in touch with the buyer to see what the concerns are, ultimately leading to hopefully a letter of intent on the business, and then take it through removing all of the contingencies into closing. Additionally, during that period, we'll be supporting the buyer by introducing him to lenders that we work with. And just again, a word about the kind of businesses we sell. It's generally the lower middle market. So we're talking about values between $1 million and $20 million. And I would say, 90% of our deals are between 2 and 6 million. So most are SBA financed. So we'll assist the buyer with that. If the buyer is new to business, we'll introduce them to some of our partners that are business transactional attorneys, CPA firms that they can engage to do due diligence and the like. And we'll get to closing. So that total process is between 3 and 9 months of engagement.
Very good. Thank you. Curt, can you tell us about your real estate broker referral program and why CCIMs are preferred partner?
Yeah, well, first of all, CCIMs are our preferred partners because they get it. There are too many commercial real estate professionals that tend to jump into business transactions that don't realize the complexity involved, quite frankly. And so we like working with CCIMs because they understand that we focus on businesses. We don't sell commercial real estate unless it's part of the particular business we have. And that's only probably 10% of the time. We're not leasing properties, so we're not competitors. It is interesting to note, though, that all of our brokers do have real estate brokers licenses. And we think that's important in dealing with leases and just bringing that professional business acumen to the transaction and such. So, that's the reason why CCIMs are attractive to us. Now, our referral program, I think, is fantastic. So what we do is we will provide 25% of the listing side commission to the referring source. So let's give a couple examples. Let's say it's a tiny business, a small business, $1 million. our commission might be something along the lines, our gross commission might be something along the lines of 10% or $100,000. So the listing side commission there would be about 60% or $60,000. So 25% of that is 15. So that's not too shabby for a small business. You scale that up to something that's typical, a $5 million business, and you're looking at, between $35,000 and $40,000 referral fee to the CCIM. So the program is on our website, and for the attendees today, I'll send a one-sheet summary to them so they have it.
That would be great, Curt. I think that business brokerage and mergers and acquisitions, selling businesses, that has such a huge future. As we look at the CEOs today, a lot of the CEOs are older, they don't have succession plans, and so selling the business or mergers and acquisitions may make a lot of sense now and in the future. So Kevin, I'd like to ask you a few more questions here. Kevin, how do you know when a stock price is high or low, and how do you evaluate your stock picks for your clients?
Thank you. Typically, I'm more of an asset allocator where I allocate assets, but a lot of people for fun like to buy a basket of stocks. So my main focus is not stock picking, but in order to do that, when I am helping people with their little stock portfolio, you look at price to earnings multiples, you look at technical analysis, you look at the balance sheet, you look at how, if the company's gone way up. So, the technology has been the leader in this, and those things have gone way up. So I think they will continue to do well long term, but they may be susceptible to coming down in the short term. Right now, the most out of favor area where there is value are consumer cyclicals. Like Curt was talking about restaurants and hospitality and things like that. Those are on sale now because those businesses have been hurt right now. But we think that those will reopen again and come back. So if you look at airline stocks, hotel stocks, cruise line stocks, all of these things, Nordstrom's is a retailer that stock has gone from 70 down to 15, right? So if you think that Nordstrom's is going to be around, then that would be something that would be of value. But one of the things, Kelly, is that you need that's very hard in this day and age is patience. You need to be able to buy something and stick with it to realize that value. And sometimes that takes a little while. So, that's in this instant technology and CNBC telling you to get in and get out. I mean, it's hard to have that patience because the bottom line is long-term stocks go up, period. Long-term real estate goes up, period. So, that's the thing, is to have the patience and also to buy things when no one wants them. Right now, value is the most out of favor it's been since the dot-com crisis. Now, when I say value, I mean stocks that are selling at lower PEs, more, older line companies, stuff like that, value stocks. So, you got to look at those consumer cyclicals in the out of favor, energy, like I said, restaurants, airlines, these kind of stocks. But if you have the patience and you can buy those when no one wants them, then you can do well in the long term. When you buy something that's had a huge run that everybody loves, then you're more susceptible to short-term disappointment, even though in the long run, you should do well. So that's kind of how I tend to look at individual stocks.
Well, patience is a virtue.
Right, yes.
So Kevin, tell us about asset allocation and what you do with that specifically.
Well, asset allocation's the 90% responsible for your return. It's not stock picking. It's how you mix your allocation between stocks, bonds, and cash and real estate. So that is very important. So everybody has goals and everyone has their own situation. So what I usually do is I create a financial plan and I create an asset allocation that fits that financial plan and that risk tolerance of that investor so that they can realize their long-term goals. So that is extremely important. Diversification, asset allocation, and that includes all these different sectors of the stock market: growth, value, mid-sized stocks, small stocks, international stocks, emerging markets, alternatives. Well, what are those? Well, that's things like hedge funds, funds that can bet on the market dropping or the market going up, and then also, things like gold and real estate. So, real estate is also a very important allocation in the portfolio as well. Now, whether that is through REITs, whether that's through your home, multifamily, or commercial property, we believe that that needs to be a piece of your overall allocation. Now, if you love real estate, it might be more, and you might have less in those other buckets, but that is the most important thing when you're investing is asset allocation. And also, you need to make sure that once you get that allocation, you can stick with it and not have something come up like this thing in March where you want to change it. Because typically that happens at the worst times, and you do things that you shouldn't do at the worst times based on emotion. So as long as you have a long-term perspective, the correct allocation, and you have enough cash to sleep at night, and that's different for everybody. So you need to have that allocation so that you can go through anything and not change your plan. And so it's different for everybody because different people react differently when markets go up and down. So anyway, that's a great question, but that is the most important thing.
Very good. Thank you. Kevin, how have REITs fared, or how do they compare with the S&P? Or I know a lot of our audience loves real estate. So
right. Well, actually, real estate has done quite well, and in most cases beaten the S&P 500. So I pulled up a chart, and I'll just give you some figures, and this goes through July 16th, so it's fairly current. So in the last year, from July 16th, 2008, well, I'm sorry, this is not current. It's about a year in the rears. But for that period, for the 1 year, a year ago, the Vanguard Real Estate ETF was 13.3 and the S&P was 9. And for a 3-year period, it was, this is where the stocks won, 47 versus 13. A 5-year period, stocks won 68% versus 45. And in a 10-year period, though, real estate's up 329 versus 296. For 15 years, it's about equal, 260 for real estate, 270 for S&P. But listen to this 20-year number. Real estate up 619 and S&P up 213. So that's significant. So, again, you want to have an allocation of everything, but real estate is an asset class that we love and we think should be a part of everyone's overall asset allocation with their balance sheet.
And we like when it's profitable.
Yes.
Excellent. So we can talk to you about various REITs, correct?
Absolutely, yes.
Okay, great. Now, Kevin, the airline industry, there was a lot of bailout from the CARES Act. Mm-hmm. And now as we're moving closer to the fall, what do you see those airline stocks doing?
Well, I see those things, those recovering. So, and this is one of those types of things where you buy them when they're unloved and out of favor. So, I like Alaska because I fly it the most. And so that's one that, we like at Ameriprise. And also, it went from 70 a year ago down to all the way down to 28, 24 to 28. Now it's back to 32. But, as long as we get a cure, which I think we will, and people start flying again, which I believe they will eventually, then some of those airline stocks should do well. Now, recently Warren Buffett did liquidate his airline holdings because he just didn't want to be in the airlines. So that doesn't mean they won't work, but they're a more challenging investment because of this, the load factors, fuel prices and stuff like that. But they've gotten much better because they can hedge their fuel prices now and take that volatility out of that, expense. And they've been really able to operate very good businesses over the last 10 years. So I think that some of the airlines should do well in the long term. And when I mean the next 2 to 5 years when people start flying again. And they'll move before that happens.
Oh, very good. And I have seen from the TSA numbers that there are more people flying, but we'll see what happens given the spike in COVID as well.
Right.
And Kevin, what are your thoughts on how the stock market will be affected by the elections in November?
Well, you know what, that's kind of a coin toss. And, but, if one party wins everything, it will have more of an effect if a candidate wins, but they don't win the House or Senate. So that kind of tends to keep everything neutral. But, if taxes go higher and there's more regulation, then that will naturally affect companies. It just depends. Typically, it doesn't do much, because it's already in place. So when someone else comes in, whether it's a Republican or a Democrat, it really doesn't do much. But unless the policies changed in an extreme way. So as long as everything's kind of middle of the road, then the companies in the United States will figure out a way how to be profitable. They're the best in the world, and they can always figure out a way to be profitable and make money. So, Warren Buffett says, do not underestimate America. So, I'm bullish on American companies, American real estate. And so, I don't think it'll have that dramatic effect unless there's extreme changes in policy.
All right, well, thank you. Curt, I'd like to turn the questions back over to you. There are a lot of CEOs who don't have succession plans, as I think I talked about. As these CEOs come closer to retirement, how do you see your business being affected? Will there be enough business buyers out there for mergers? And how can we as brokers help with this process?
I think we're talking about both the characteristics of the buy side and the sell side here. So looking at the buy side, looking at the demand for businesses, as I mentioned before, there has been a significant demand for profitable businesses over the past 2 decades, with the exception of the Great Recession, where financing was an issue in acquiring them. It's been very, very robust. And so I only see that getting stronger. I mentioned before that the number of calls that we're getting from potential buyers here during the pandemic has increased, where people have realized they need to take control of their own life. So they don't, they're leaving, they're willing to leave comfortable jobs at Microsoft, Amazon, Boeing, of course, will have their layoffs. So there will continue to be strong demand on the buy side. On the sell side, you're right. Without a succession plan, really the only exit option is to sell. And I would say that probably 75 to 80% of our business sales are due to retirement. And that's because people are, the older baby boomers now don't have a second generation to pass the business along to, so they need to sell. So I only see things improving. I mentioned our activity of late. We just put a large $16 million technology company into escrow. We had a merger between 2 boat maintenance businesses recently. So I see, as we come out of phase 1 and 2 and get into 3 and hopefully 4, that level of activity to increase. So our business will be very robust.
I would agree. How do we, as brokers who work with investors and tenants, how do we know if a merger or acquisition or a sale of their business, how do we know if that would be right for them?
Well, what we do as a firm over the last 45 years is to evaluate each and every transaction for the advantages and disadvantages of selling, either merging or selling. So, we get into the very specifics of one, is the price going to be there, plain and simply, so the first discussion is on the valuation and the pricing and such. And then it's a matter of making sure that owner has some sort of plan post sale, because they could easily hang on for some period of time by shifting some of the responsibilities to either, hopefully a family member, but a key employee. But in terms of brokers, CCIMs out there, and what they could do, and what comes to mind to me is that there may be some tough negotiations with a tenant who is not willing to sign a new lease. And a suggestion might be for them to consider the sale of their business, because that would be a win all the way around. It would be a win certainly for the CCIM in the sense of getting a renewed term. And in working with somebody like us, we don't look for any commission on that lease, as part of the business sale. We're happy to have the business sale and then have a new owner, with a new lease with the property manager and such. So I don't know if that gets at the guts of what you're looking for, but.
That does, Curt. So we should come to you if we think that might be a good idea, or at least have you take a look at it and determine and work with the owner to determine if that makes sense for them.
Yeah, it's a way of you being able to address a problem or a challenge, when somebody is not willing to, look at extending that lease for the long term.
Okay, very good. Well, tell us a little bit about the selling franchise. I understand, unlike other business brokers, you also sell franchises in addition to existing businesses. Tell us about that.
Yeah, well, in your kind introduction earlier, you mentioned that I've been a franchisee on a couple of occasions, running a senior healthcare business, and also my business brokerage, which was focused more on the Main Street side. IBA, again, is in that lower middle market area. So I have a real appreciation for franchising, because it did well by me on 2 occasions. And my background is such that I was more of an executor type. I'm not a very innovative guy, but if you tell me what to do, give me a business model, hopefully I can execute that. So when I came to IBA, being a sell side firm, I saw a real potential benefit for the buyers that we're working with. So let me just give you a brief example. So if we were to list a massage business, let's say it's a massage envy business in Bothell that's looking to sell, and we list it for $800,000, and the owner's taking a couple hundred, $250,000 a year out of it. We'll find that buyer, we'll go through the process that I mentioned, but if that buyer doesn't close for whatever reason, either final terms and conditions couldn't be reached, or he had some concern during due diligence about employees leaving or whatever, and the deal falls through, that buyer then asks our broker, well, geez, it's too bad we couldn't make that happen, but I liked the franchise, I like the business model. What else do you have like that in inventory? Well, as I mentioned before, it's really a seller's market. There aren't that many profitable businesses at that level available, certainly not in massage, and nothing available in the market. So our broker at that point would say to the buyer, look, rather than pay 3-4 times cash flow for that existing business that's in Bothell, you live in Renton. Why don't you talk to Curt about another massage concept? It could be Elements, it could be Massage Heights, Hand and Stone, similar business model. You already like that, and you can locate it where you want, and you can hire the employees, so you won't have those same concerns about them leaving after day one. And so it's a wonderful option for buyers who, have given us their criteria, but can't find something in the market. There's just nothing there to buy. So I am a member of a franchise brokers association that represents over 300 franchises. And there are probably 4,000 to 5,000 concepts out there now, but, really it boils down to about 300 to 500 that are really, worth the investment. And then of those, you know, I have my own favorites that I've worked with that I share with folks, and try to give them different options. You know, I lay 3 or 4 different opportunities, try to listen to what they want. You know, do they want the least amount of risk? They want, you know, a certain income level. Do they want to participate in a certain way in terms of either sales or operations? And I make that fit. And then again, I support them as an advocate along the way by putting them in touch with the right franchise attorney versus a general attorney, with the right lending sources that like franchises, particularly the one they have in mind. And it's a lot of fun. It's a lot of fun.
Well, that's really great. And I think that you've opened our eyes up to a lot of the resources that you can provide out there for businesses, for tenants, for clients, and for whether it's an investor or a seller. So thank you. And we did have a question from our audience from Nathan Graham. And Kevin, can you answer what your thoughts are on retail REITs? And he's asking specifically retail income O. They've done a great job, but he's concerned about their exposure to restaurants, theaters, and gyms. Retail REITs, tell us about that.
Yeah, I don't in particularly follow retail REITs in particular, but if they do have exposure to those areas, obviously that could be a concern in the short term, or an opportunity if they are associated with ones that will survive. So, you know, you do have to be careful about what are the holdings within the REIT, and make sure that you're diversified within with REITs that have, you know, diversified holdings in areas that will survive. So, you know, it could be an opportunity, or it could be a place you want to avoid if there's exposure to things that might not make it through this.
Very good. So I think what I'm hearing is that we can look to you, Kevin, to ensure that we have the risks that we want. We're diversified enough with regards to our asset portfolios, and as far as where we want to be in the future. Is that correct?
That's correct. It's asset allocation, it's planning and diversification, and making sure that the risk aligns with the comfort level, and it allows you to achieve your goals by maintaining a specific rate of return over the long term.
Very good. Well, thank you so much. I'd like to thank our speakers today, who are also our CCIM sponsors. We appreciate your time, all the knowledge that you've given us, and your support. I'd like to also thank our attendees listening. A copy of this recording will be found on our website at CCIM-WA.com. We'd love to have you get involved, attendees. Please check out our website for more information on becoming a member, being a sponsor, or even committee involvement. And then finally, I'd like to leave you with this. Remember to look up and to look forward. Continue to enhance your knowledge and your networking. Thank you so much, and have a great day, everyone. Take care.
Thank you.
Thank you.